Good morning, everyone. It is June 28th, Monday, and this is Nadex Morning Analysis, where we're going to look at some potential hotspots today and talk about what might be coming up later this week as well. My name is Todd Rich. I am with Nadex. With me is Brian Caprice from Keep Trading Simple. Before Brian and I jump into it this morning, I need to share this disclaimer that trading involves risk, may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, it's a little bit slow start to this week. This is the week before the Independence Day holiday in the US. We don't have a lot going on early this week. Now, I am going to tell you later this week, Thursday and Friday, we actually have some significant and important news numbers that are coming. But early in the week, it might be a little quiet. We'll see how people interpret some of the things that are going on. And I know people are looking to get out early for the holiday, which is rather interesting because we could have thinly traded markets at the end of the week when people are trying to bug out for the holiday, and we've got some things that could impact the market. So this could be a very interesting week for the markets, as there could be an out trade, a dichotomy between some news that can really move the markets and people's attention on them, which can cause some, sometimes unforeseen dramatic moves in the market. What are we going to talk about today? It is a quiet day. We've got some Fed chairmen speaking. We've got gold. You can see the gold chart up here. I haven't done anything to this gold chart, but you can see it is still range bound. I'm going to just extend out a little bit some of these previous levels that we've had, and you can see that it continues to trend right, for the most part, inside this range. With that, I mean, there are some binary options for you to take advantage of if you think it's going to keep going sideways. But we'll talk about that. We're also going to talk a little bit about, since we're in commodities, we'll talk a little bit about crude oil. Interesting enough, with the news going on with the U.S. sending some strikes on some Iran-backed places in the Middle East, oil's not doing anything. It's not reacting to it yet, but we'll wait and see what happens when the retail trader gets in there. And then what we are seeing overnight, some dollar strength. And we're going to take a look at some currency pairs and take a look at, the dollar picking up a little bit of strength, reversing itself a little bit. We'll take a look there. So that was and there was one more thing I wanted to mention while I've got everyone on. It is the holiday week next week. Brian and I are going to be taking next week off. So we will not be doing these sessions next week, but next week only. We're going to be doing it all through this week. And then the week after, this will be going again. It's just next week we'll be down. So Brian, before I flip it over to you, was there something you wanted to share?
That I wanted to share?
Yeah, like on your screen.
Oh yeah. Thanks, Todd. I appreciate it. It's Monday.
I'm thinking, where is Brian's screen? Here we go.
What is he talking about? I'm like, I have no important news. I was like, they're going to figure out really quickly. I don't have a voice today.
Something personal that happened.
I was like, is it decaf coffee? Like, what's going on here?
No, Thanks, Todd. It's very important. We need to know, did you win the tournament this weekend?
No, we didn't actually. It was a comedy of errors. We were leaving, and they were like, hey, you have a game at 4 o'clock. We're like, what do you mean we have a game at 4 o'clock? What? Like, no one told us that we were advancing. And I was like, I have 5 kids. Sorry. Didn't mean to leave. We didn't know. Like, normally every tournament they've told us, advance, don't go anywhere, just to make sure it doesn't happen. But I was one of the last people off the field. I'm like, how are we playing? There's no one here. So
oh my gosh,
comedy of errors. I was like,
that doesn't happen in the pros though. I don't think the quarterback goes, sorry, dude.
Yeah, I mean, I signed they told me, hey, thank you for coming out this weekend. We appreciate it. I took that as I can go home now. And so I cleared my kids and went. And then a parent from another team was like, hey, you're supposed to play at 4. I'm like, what? Huh?
We are?
Yeah. That was I was like, okay, sure. Anyway, that is why I have no voice. And if it goes in and out, I promise I'm not a 13 or 14-year-old boy. If it goes in and out, you guys understand. I had a couple kids that were 6. I don't know if I caught their credit or what. But yeah, so gold. Again, it's continuing with its kind of boring sideways movement here. As we mentioned last week, I think 1791 and 1764 really are tops and bottoms, and you can see it almost looks like a, I guess it's called what, an echocardiogram, where you have the, the boop 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 up and down. And it's down, 0.13 right now. Silver's up 0.2, so they're kind of, tracking together. Silver didn't go as far down as gold did, and again, on a very micro level, I mean, you could say that, hey, listen, there was bias there, we should have went long, and yeah, it did go up from there. But I wouldn't really say that there's any really strong kind of movement right now with this. As I said, gold is, unfortunately, I think gold traders are having a very difficult time right now because everybody says there's inflation everywhere, but it's all going to disappear. So it's not something we need to worry about. And we are in such a historically low interest rate environment. You would assume that there's a lot more. One person says we're fully recovered. Another one says we're just starting, but it's going to be so robust, it's going to be crazy. And again, we're seeing inflation, but everybody across the board says, nope, it's not real. It's not real. It's going to go away. Until eventually someone's going to say, hey, you know what? The inflation is real, and that will send gold flying. So it's not really getting much help. It's not really getting much legs. I would think long-term investors got to be loving it here. It's definitely something that, everybody know. Eventually, even if this is transient, eventually, I mean, their mandate is to create inflation. They're going to have to force inflation if this is not real. So long-term investments in gold are probably not bad. Short-term, again, we're really playing back and forth. And again, if you do know, one of those neutral strategies, there's a nice range here. There is a lot of catalysts, as Todd mentioned, later in the week. This is, it's going to be the first week. So today and tomorrow are not real big, but consumer confidence tomorrow will be important. We saw negative numbers last week with some of the confidence in spending and saving and things like that. This is it's projected to be up. So there's some positive movement. And again, going into Wednesday, we have the first of the employment data, the ADP number, which has been really this has been a big mover on Wednesdays, followed by Chicago PMI, which is a big one. And then again, crude oil, pending home sales affects us a little bit. Thursday, we have ISM manufacturing, also important, plus OPEC is speaking, as well as Friday is non-farm, biggest trading day of the month. Now, again, it is going to be into a holiday weekend, which will lessen it a bit. But again, when it's more thinly traded, as Todd mentioned, lower volumes because it is a holiday weekend, many people will trade that and then take off after that. They'll fly the coop. So it could be some real big movement. But right now, the expectations both for non-farm is very, very high, as well as Wednesday, same thing. Wednesdays is not as high. The forecast is 550, coming down basically half of what it was, where Fridays is very high. So it's above what the previous forecast was. So, it's an interesting kind of setup for the week. But again, for gold, again, we need that inflation. That Chicago PMI should definitely help. And then some of the unemployment numbers should be ways to go long. But, right now I would say, what we're seeing kind of one direction in the European session, and then it's kind of stabilizing and going the other direction. And when you mention that, the first thing you got to say is, all right, well, what is gold? What is the dollar doing? Is this a dollar-based move? And when you look at the dollar index, you can see that the dollar index came up and grabbed an area where sellers were, but in a very, very slow process. So it's kind of following, kind of not following. I feel almost at this point it's detached because they used to be almost mirrors, and now it is not so much. So, but this is Monday. We all know that the U.S. trader steps in Monday and really kind of establishes the trends for the week. So maybe they'll start kind of picking up in there. As again, we've seen an overnight dollar kind of push forward, but gold is not. It's not having the rally that the dollar had.
Yep. Do you want to talk about oil at all? Hey, by the way, real quickly, I mean, because we just asked, which charting platform what are you using right here?
This is TradingView. I use it because it's online, and depending on where I'm at, I can get it on my phone. You can get it at home. It doesn't require any software. It's just a web browser. You cannot filter in many brokers in there, although they are getting more. They're definitely getting a lot more brokers that are filtering in, so you can actually trade live through it. I just like it because it's clean, it's easy, and it has everything in one location. One of the biggest problems, typically when you're trading assets is like, if I'm a futures trader, a lot of times the Forex data is not great, or vice versa. If you're at a currency broker, you don't have data on the indices and futures in most cases because it's a Forex broker versus kind of being an all. And, sometimes there'll be even some differences in a dollar or a euro futures contract versus the euro dollar. So I like it because it has everything all kind of in one, and I think they're clean charts and easy to see. It does have some limitations, I will say. Even over some programs like you guys, I used to use MT4, and that's what I trade through typically. MT4 has more indicators than TradingView does, but I thought it was clean and easy to see. And like I said, because it saves everything, I don't have to hit save chart. I don't have to worry about it, crashing on my computer or anything like that. It's very easy to say, and anything that I've ever put lines on and I click over to it, it's saved automatically. And I like it that I can actually publish trades and send them to people as well.
And now, and then obviously on the Nadex platform, you've got a lot of the functionality as well, but then all of your trading baked into it.
Mhm.
So you can do a lot of what Brian does. Now I've got the dark theme. I mean, this is all customizable, by the way.
Yeah.
If you don't like the dark theme, you can certainly do the light theme, and it does have. I like that. That to me is always it's just kind of hard on my eyes. But we do have a bunch of technical indicators that you can put on. All the drawing tools Brian's using, we've got the drawing tools as well. And you could decide what you want shown. I mean, how do you want your candlesticks? Do you want to see all the strikes? Do you not want to see the strikes? It also comes in handy because for instance, right now, I don't have all the strikes. I'm just choosing one binary option. I could have all these binary options up here, but when it comes to call spreads or knockouts, they're right on the charts. They're shaded. It's very easy to see them if you're looking for call spreads and knockouts. And you can, by the way, a lot of traders have multiple screens. I'm going to do something. You can even tear off your chart, and if I can grab it, if you have multiple screens, you can have multiple charts just sitting on multiple screens with order tickets. I'll tear off an order ticket, and I could have multiple charts with multiple order tickets if I can. There we go. Set up. So I could have a crude oil chart and a crude oil order ticket, and I can have a bunch of these on different screens with multiple products looking, so I can watch and look and see everything that I had. I know that some people want to see these charts with tighter numbers. So anyhow, we'll try to zoom in a bit.
Yeah. And if you guys are new to charting and you want to try an online charting platform as well, don't forget IGUS. It's a Forex broker, but it's the same code that Nadex uses. Because actually, Nadex, I guess, got it from IGUS. They have more tools over there. They have a cool function where you can actually, like I talk about setting alerts on a lot of your charts. You can actually set alerts through that platform, and it'll actually send them to your phone. You have the app on your phone as well. So there's some cool things you can do with it.
And the nice thing about Nadex and IG is you'll get real-time data and you won't have to pay for it. So, you want to know what's going on in the equity indices. You'll get real-time data on the Nadex chart. You want to know what's going on in gold or oil or the commodities or it's all real-time data that we've got up there. So, certainly useful. All right, we're going to work on trying to make this bigger. I'm wondering, there's a way for me to zoom in. I just don't know how much that's going to help you guys.
It's hard to see on ours, yeah. And here's the thing too about the numbers. Just whether you're talking about seeing the numbers on our screen or on your home screen. Remember, a lot of times there can be slight bits of arbitrage from broker to broker to broker. So, and particularly in currency. So a lot of times when we're talking about areas, I'll say an area, not an exact number, because, and this is important to understand, with currencies, because there's no centralized exchange, you may have a quote that comes from IG that is a few pips different than what it is at, say, Forex.com or something like that. So it's important to understand you have to look at your own charts and find your own levels, because even when a broker ends a candle may be slightly different from, depending on where its kind of exchange and data point is coming from. So the candles may even be slightly different. They can use the same subset of data, and it's slightly different. So you should always do it on the charts that you're using. Even when I chart with something here, and if I enter it on another platform, I'm always confirming the chart on my other platform to make sure that it still matches up.
Yep.
It's just kind of like a safety feature. So,
by the way, I did just zoom in. It makes it kind of difficult for me because I am so tight in here, but we might be able to, I guess that's kind of good going forward. I don't know, you guys want to chime in if you think this helped at all, where I really zoom in. you might be, maybe you can see these a little bit better as well, or use a larger monitor.
Mhm.
All right, we kind of got sidetracked a little bit on
Yeah.
charts. Let's go back and do a quick. Let's finish up some of our
Yeah.
analysis.
Switch
We
over. Yeah.
talked about
So
gold being
oil.
range bound. We talked about oil not reacting yet to the news, but we did talk about the dollar strength. I thought maybe you could just talk, one or two currencies quickly
Mhm.
on where we're seeing that dollar strength,
Yeah.
unless
I
you want
mean,
to do oil.
it doesn't matter. I mean, we can do. I could leave on oil real quick. Yeah, dollar index pushed up in 7 o'clock into an area of sellers. It was a very good selling level. Again, we've seen kind of this shark tooth, kind of like I call it sawtooth, shark tooth. There's a bunch of different things there, but again, it's starting to reverse. I would say there's a lot of different movement in there. I would say dollar Swiss is one. You can see that dollar Swiss also coincided with the same type of kind of reversal level in a 30-minute. It's up about not only about 26 now, but it's kind of pushed and it's already moved a little bit. Dollar CAD, you're seeing some decent movement, and also the pound yen. If we continue to have, we had talked about this level last week. We ended up hitting it about 3 o'clock or about 3 o'clock in the morning today, about right around the European Open. So this was already one trade that you should have been in and probably out of at this point. But we had another level. If we broke below 138.58. Remember what we've seen for the last 6 months. We typically have $1 base trend on Monday, and then it reverses on Tuesday and kind of goes the rest of the week. So, if the trend today is going to continue to be dollar strength and pound weakness, there was some pound news, and you're starting to see that retrace. I would look for any type of basing down in this level. And again, adjust it once you see it, because this has come from a prior level. But you can see we've had one hit, really kind of two and maybe three here. The next one coming down is getting to that level where we're like, hey, listen, it's four, it's probably going to break. So look for that telltale sign of any basing to establish a new level of risk. I don't know where it's going to be, but if it comes in here, then we're looking for this kind of Harry Potter trade and had this continue to push down to the downside. And I would say buyers not stepping into 138 flat. So decent runner, about 60 pips to the downside if we can get it. We may need the basing today. It may be a later day trade. We'll see how big the U.S. trader is going to affect it today. In the pound. And again, I'll leave this with oil. I would say watch where oil is. It was kind of one of the small scenarios. Was it a very tiny? Not really, considering that there was strikes. If you remember the news last week, sanctions were lifted, and this week we're 4 days later we're now attacking military targets, militia, Iranian-backed militia in Iraq. So yeah, I'm sure there will be more. You typically don't do a strike and there's no retaliation on it. So we'll see what kind of headlines. Again, it could really. At this point, oil is kind of boxed in. I guess it's ready for an explosion. And again, you guys can see here the little big scenario is something that is very, very real, and something like Middle East kind of war talk and missile strikes. That tends to be a catalyst. So again, if you want to mark top and bottom, you can watch for a breakout top and bottom on this one. But I would expect there's going to be some decent oil as soon as the news kind of gets in there and starts churning everything up today.
Yeah, and with that, a way to play that would be potentially with some of these binary options, as we see, oil's just it has trended sideways, but if I, it's kind of difficult when I'm so zoomed in. I'm going to see what I can do here. You
Remember,
can see,
lifting sanctions would mean that Iranian oil can be put back on the market, as
that
well
would,
as
right, and that would drive prices
down.
Right? So that's
Yep.
what they're talking about. Is they're going to lift these sanctions, but at the same time, we're having military strikes. So it is rather interesting. I don't know what's going to happen and how the retail trader is going to take a look at that. Not to mention the fact that we are going into an area where it's a time when demand for oil does tend to go higher as we're going into a holiday. So you just this one, it's a bit all over the place at the moment, and we're
Yeah,
kind of curious how
I
this
would
is going
say,
to pan out.
and again, we don't typically do weekly forecasts, but I would say watch for oil to drop this week overall. One, because again, the Iranian situation, we haven't had everything. There wasn't a very, very big spike today. If this is it, it's done, it's over, and we don't hear anything about the rest of the week, that means Iranian oil supply is coming online, which increases supply. And also, we have the OPEC JMMC meeting on Thursday, where they are discussing the next increase in production.
Right.
There's supposed to be an increase in July. They're talking about increasing even more after that. Again, that is another one of those fundamental factors that increases supply. Lots of supply, price comes down.
Price goes down. So and that's what I was saying. Later in the week, going to be interesting. So we've got some interesting things to come up on Thursday with that, and then again on Friday. Any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, you can hit him up down at the bottom there. It says support@keeptradingsimple.com. I think, today while we started off the day talking a little bit about gold being range bound, some interesting potential volatility with oil. Both, we got both sides of the coin. Is the supply going to start flowing because sanctions are getting dropped and everything's going to be great? Or are we going to have a war and supply going to tighten up? We know demand is kind of increasing, but we'll wait and see oil, it's something to be keeping an eye on. And then we saw some strength in the U.S. dollar. Looked at a couple of the Swiss franc, the Swiss to the U.S. dollar. I'm sorry, the Swiss to the dollar, as well as the pound, the dollar pound. Anything else, Brian, you wanted to throw out? Last parting shots?
No, not today. I was gonna say there's a bunch of small news factors, but the biggest thing is figure out what the trend's going to be in that first half hour, and it should ride today.
Perfect. With that, Brian and I will catch you again tomorrow morning. Again, we will not be here next week. Want to wish everyone good luck in the markets. Thanks, everyone. We'll catch you tomorrow morning.